You ever wonder how a company goes from 6 months away from total collapse to being worth $3 trillion? Here's the insane story of how Jensen Huang bet everything on a technology nobody believed in December of 2008. NVIDIA headquarters in Santa Clara, California. Jensen Huang is sitting in a conference room, and from what I've pieced together from multiple interviews he's given over the years, he's staring at a financial projection that shows the company is hemorrhaging money. The gaming GPU business, which is their entire revenue stream, is collapsing. The financial crisis has destroyed consumer spending, and sales are down 40% according to their quarterly filings. But here's what makes this moment so critical, and this is documented in their SEC filings from that period. Huang has been quietly building an entire division focused on something called CUDA, a programming language that lets graphics cards do general computing, and it's not making any money. Actually, it's losing millions every quarter. The board is furious. Investors are demanding he shut it down and focus on gaming. His chief financial officer, according to later reports, has told him multiple times they can't afford this bet. And Huang, who's been CEO since he founded the company 15 years earlier, makes a decision that will either save NVIDIA or destroy it completely. He doubles down. He tells the team they're going all in on CUDA, on general-purpose computing, on this crazy idea that graphics cards could be used for artificial intelligence. Nobody sees it coming. And what happens over the next 15 years? It's the most successful corporate bet in modern business history. I'm Alex Morgan. This is Behind the Billion. And today we're breaking down the decision that turned NVIDIA into a $3 trillion empire. Now look, I spent the last week diving deep into this story, and I mean deep. I read Jensen Huang's interviews going back to the 90s. I went through NVIDIA's shareholder letters. I studied their SEC filings. I read everything I could find about the development of CUDA and the AI revolution. And here's what blew my mind about this story: the bet Huang made in 2006 and 2007 when he started investing heavily in CUDA. It didn't pay off for almost 10 years. Think about that. He spent a decade building technology that lost money every single quarter, while investors screamed at him to stop, while the board questioned his judgment, while analysts called it a waste of resources. But he kept going. And that persistence, that willingness to endure years of criticism while building toward a vision nobody else could see, that's what separates the companies that make it from the ones that don't. So let me take you back to the beginning, because you can't understand the CUDA bet without understanding where Jensen Huang came from and how NVIDIA almost died multiple times before it ever became successful. Huang was born in Taiwan in 1963. His family moved to Thailand when he was young, and then when he was 9 years old, his parents made this decision that shaped everything that came after. They sent him and his brother to live in the United States with relatives so they could get an American education. Now, I can't imagine what that must have been like for a 9-year-old kid, getting on a plane to a country where you don't speak the language, leaving your parents behind. But here's what happened, and this is from Huang's own recounting in multiple interviews. They ended up at a boarding school in Kentucky that was actually a school for troubled kids. His parents didn't know this when they sent him there. And Huang has talked about how he and his brother, who was older, had to learn to survive in this pretty rough environment. He said in interviews that his roommate showed him all his knives on the first day. That's the kind of place it was. But here's what's interesting about this experience, and Huang has reflected on this later in life: it taught him resilience. It taught him that you can adapt to almost anything. And when you look at his career, when you look at the bets he made that seemed insane to everyone around him, you see this pattern of someone who's comfortable being uncomfortable, someone who can endure difficulty while staying focused on a long-term goal. Eventually, his family reunited in Oregon, and Huang went to Oregon State University, got his undergraduate degree in electrical engineering, then went to Stanford for his master's. And this is the late 80s, early 90s, right when the personal computer revolution is taking off. Huang gets a job at LSI Logic, then at AMD, working on chip design. He's learning the semiconductor industry from the inside. And in 1993, when he's 30 years old, he makes the decision to start NVIDIA with two co-founders, Chris Malachowski and Curtis Preem. Now here's the thing about 1993, the computer graphics market is absolutely chaotic. There are dozens of companies trying to build graphics chips. Everyone sees the opportunity. PCs are getting more powerful, games are getting more sophisticated, there's clearly going to be demand for better graphics. But the market is fragmented, there's no clear winner, and most of these companies are going to die. Huang and his co-founders raise about $20 million in venture capital funding, and they start building their first chip. And here's where the story almost ends before it begins. Their first product, a chip called the NV1, launches in 1995, and it's a disaster. The technology was impressive for the time, but they made a critical mistake in the architecture. They built it around quadratic texture mapping instead of the triangle-based rendering that was becoming the industry standard. What this meant in practice is that game developers didn't want to use it because it wasn't compatible with the direction the industry was moving. Sales were terrible. The company is burning through cash. And remember, this is 2 years after founding. They've spent most of their venture capital and their first product has completely failed in the market. Now, most companies don't survive this moment. You launch your first product, it fails, your investors lose confidence, you can't raise more money, you shut down. That's the normal story. But here's what Huang did, and this is documented in multiple accounts of NVIDIA's history. He went to Sega, the gaming company, and convinced them to fund the development of NVIDIA's next chip in exchange for Sega getting to use it in their gaming consoles. This gave NVIDIA the runway to keep operating, to keep paying engineers, to build the next generation of technology. It was a lifeline at the exact moment they needed it. And this is the first example of a pattern you see throughout Huang's career. When things go wrong, and they go wrong a lot, he finds a way to keep the company alive long enough to get to the next product, the next iteration, the next chance to succeed. He doesn't give up, he adapts. So they build the NV3, their second-generation chip, and it's better but still not a hit. But then in 1999, they launched the GeForce 256, and this is the moment everything changes. The GeForce is fast, it's affordable, and most importantly, it's perfectly timed with the explosion of 3D gaming. Games like Quake 3 and Unreal Tournament are coming out, and they need powerful graphics cards to run properly. The GeForce becomes the best-selling graphics card on the market. NVIDIA goes public in 1999 at $12 a share, and suddenly Jensen Huang is running a successful, profitable company. Now you'd think this is where the story gets easy, right? They found their market, gaming GPUs, they're profitable, they just need to keep iterating and improving. But here's where Huang starts to reveal what makes him different from most CEOs. He's not satisfied with just dominating the gaming market. He starts asking a question that seems kind of crazy at the time. What else can we do with these chips? A graphics processing unit, a GPU, is fundamentally different from a central processing unit, a CPU. A CPU is designed to do one complex task really quickly. A GPU is designed to do thousands of simple tasks simultaneously in parallel. That's what makes them good at graphics. You're calculating the color and position of millions of pixels at the same time. But Huang starts thinking, what if we could use that parallel processing power for other things? What if scientists could use GPUs to run simulations? What if researchers could use them to process massive data sets? What if we could make GPUs programmable for general-purpose computing, not just graphics? And this is where CUDA comes in. In 2006, NVIDIA launches CUDA, which stands for Compute Unified Device Architecture. It's a programming language and platform that lets developers write software that runs on NVIDIA GPUs for any kind of parallel computing task, not just graphics. And Huang makes a massive bet on this. He dedicates hundreds of engineers to developing CUDA. He starts building an entire ecosystem around it, creating tools, libraries, documentation. He's essentially trying to create a new computing platform. Now here's the problem. Nobody cares. I mean, there's some interest from researchers and scientists who can see the potential, but there's no business model. Universities and research labs aren't buying enough GPUs to make this profitable. The gaming business is still the only thing making real money. And every quarter, NVIDIA is spending millions of dollars on CUDA development, and every quarter it's losing money. I was reading through NVIDIA's shareholder letters from 2006, 2007, 2008, and you can see Huang trying to explain this bet to investors. He keeps talking about the potential for general-purpose GPU computing, about how this could open up entirely new markets. But the numbers don't lie. CUDA is a cost center. It's not generating revenue. And the board, according to multiple reports over the years, is skeptical. They're asking why they're investing so much in technology that isn't producing returns. Some board members, from what I've read, wanted to shut down the CUDA division entirely and just focus on gaming. But Huang refuses, and I think this is the most important decision he ever made. He could see something that nobody else could see yet. He understood that if you could make GPUs programmable, if you could create a platform where developers could harness all that parallel processing power for any task, you weren't just building a product, you were building an ecosystem. And ecosystems are what create lasting competitive advantages. Let me give you a specific example of how this played out. In 2007-2008, there are a few researchers starting to experiment with using GPUs for machine learning. Now, machine learning at this point is still pretty niche. It's not the massive industry it is today, but there are some computer scientists who are working on neural networks, and they realize that training these networks requires massive amounts of parallel computation. It's the perfect use case for GPUs. And because NVIDIA has CUDA, because they've built this whole platform and ecosystem, these researchers start using NVIDIA chips. One of the key moments, and this has been documented in multiple papers and interviews, is when Andrew Ng at Stanford starts using NVIDIA GPUs to train deep learning models. Ng publishes papers showing that GPUs can train neural networks way faster than CPUs. Like not 10% faster, we're talking 10 times faster, 100 times faster for certain tasks. And this starts to get attention in the academic community. More researchers start using CUDA. More papers get published showing the advantages of GPU-accelerated computing. But here's the thing, this is still tiny in terms of revenue. We're talking about universities buying a few hundred GPUs, maybe a few thousand. This is not moving the needle for a company that's making billions of dollars selling graphics cards to gamers, and the board is still questioning why they're investing so heavily in this market. Then 2008 happens, the financial crisis, and NVIDIA gets absolutely hammered. The gaming market collapses because consumers stop buying expensive graphics cards. NVIDIA's revenue drops by more than a third, the stock price crashes, and suddenly the company that looked invincible just a year earlier is fighting for survival. And this is the moment I described in the cold open. December of 2008. The company is losing money, the board is furious, and Huang is faced with a choice. He can shut down CUDA, fire those engineers, cut costs, and try to survive the financial crisis by focusing only on the core gaming business. That's what most CEOs would do. That's what the board wanted him to do. Or he can keep investing in CUDA, keep betting on this vision of general-purpose GPU computing, and hope that it pays off eventually. Now, I don't know exactly what was going through Huang's mind in those meetings. I wasn't in the room. But based on everything I've read, based on his interviews and the accounts from people who worked at NVIDIA at the time, he made the decision to keep going. He kept the CUDA team intact, he kept investing in the platform, and he told the board essentially, trust me, this is going to work. And here's what happens next. 2009, 2010, 2011. The gaming business recovers as the economy recovers. NVIDIA gets back to profitability, but CUDA is still not a major revenue driver. It's growing, there's more adoption in scientific computing and research, but it's not the breakthrough everyone was hoping for. But then around 2012, 2013, something starts to shift. Deep learning is starting to take off. You've got Geoffrey Hinton and his students at the University of Toronto using NVIDIA GPUs to win the ImageNet competition, which is this major computer vision challenge. They build a neural network called AlexNet, and it crushes the competition. And they did it using NVIDIA GPUs and CUDA. This gets massive attention in the tech world. Google, Facebook, Microsoft, all the big tech companies, they see this result and they realize, okay, deep learning works and it requires GPUs. And here's where NVIDIA's 10-year bet on CUDA starts to pay off, because they're the only company that has a mature platform for GPU computing. AMD has graphics cards, but they don't have anything like CUDA. Intel has CPUs, but those aren't designed for parallel processing. NVIDIA has spent a decade building the software, the tools, the ecosystem, and suddenly, they're the only game in town for anyone who wants to do serious deep learning. The tech companies start buying NVIDIA GPUs by the thousands, then by the tens of thousands. Google is building data centers full of NVIDIA chips. Facebook is using them to power their image recognition and newsfeed algorithms. Microsoft is integrating them into Azure, and NVIDIA's data center revenue, which barely existed in 2012, starts growing exponentially. I'm talking about doubling, then doubling again, then doubling again. Huang sees this happening and makes another critical decision. He doesn't just sell GPUs to these companies and call it a day. He invests even more heavily in the software ecosystem. NVIDIA builds libraries specifically for deep learning, tools like cuDNN that make it easier for developers to build neural networks on NVIDIA hardware. They create partnerships with every major AI research lab. They start hosting conferences and training programs to teach developers how to use their platform. They're not just selling chips, they're building the entire infrastructure for the AI revolution. And this is where you see Huang's long-term thinking really pay off. Because by the time AI goes mainstream, by the time every company in the world is trying to build AI capabilities, NVIDIA isn't just the market leader, they're the entire market. If you want to train a large language model, you need NVIDIA GPUs. If you want to run computer vision at scale, you need NVIDIA. If you want to do any kind of serious AI work, you're buying NVIDIA hardware and using NVIDIA software. Let me give you some numbers to show you how insane this growth has been. In 2012, NVIDIA's data center revenue was basically zero, maybe a few $100 million. By 2016, it's about $300 million. Okay, that's growing but still small compared to their gaming business, which is bringing in $5 billion a year. But then watch what happens. 2017, data center revenue hits $714 million. 2018, $1.9 billion. 2019, $2.9 billion. 2020, $6.7 billion. And it just keeps accelerating. By 2023, NVIDIA's data center revenue is over $18 billion, and in 2024, it's projected to be over $40 billion. Think about that. $1 A business that didn't exist 15 years ago that the board wanted to shut down is now generating more revenue than the entire company was worth in 2010. And it's not just the revenue, it's the margins. GPUs for AI are expensive. NVIDIA can charge thousands of dollars for a single chip because there's no alternative. Their gross margins on data center products are over 70%. This is printing money. And here's where it gets even crazier. In 2022, OpenAI launches ChatGPT. And overnight, AI goes from being a niche technology that tech companies used to being something that every business in the world is trying to implement. Every company needs AI now. Every startup is building AI features. Every enterprise is trying to integrate AI into their operations, and all of them need GPUs. The demand is so intense that NVIDIA can't make chips fast enough. There are waiting lists for their top-end GPUs. Companies are paying above market price just to get access to chips. And NVIDIA's stock price, which was around $200 in early 2022, goes absolutely vertical. By the end of 2023, it's over $400. By mid-2024, it's over $900. The company's market cap crosses $3 trillion, making it one of the most valuable companies in the world, more valuable than Amazon, more valuable than Google. And Jensen Huang, the guy who almost went bankrupt in 1995 with the NV1, the guy who spent 10 years investing in technology that lost money every quarter, is now worth over $50 billion personally. Now let me pause here because I want to talk about what actually made this possible. Because it's not just that Huang got lucky and bet on AI before anyone else. Lots of people saw AI coming. What made NVIDIA succeed was the specific decisions Huang made about how to build the business. First, and I think this is the most important one, he was willing to invest in long-term technology even when it didn't make financial sense in the short term. CUDA lost money for years. The board hated it. Investors questioned it. Analysts didn't understand it. But Huang kept funding it because he could see that if GPUs became a general computing platform, they became the standard for parallel processing, NVIDIA would have a massive competitive advantage. And he was right. By the time AI took off, NVIDIA had a 10-year head start on everyone else. AMD couldn't catch up. Intel couldn't catch up. The ecosystem was already built. Second, Huang understood that hardware is only valuable if you have software. A lot of chip companies just make chips and assume software developers will figure out how to use them. Huang did the opposite. He invested hundreds of millions of dollars, maybe billions over the years, in building CUDA and creating libraries and tools and training developers and building a community. And that software ecosystem became a moat. Once developers learned CUDA, once they built their applications on NVIDIA's platform, switching to a competitor became incredibly difficult. You'd have to rewrite all your code. You'd have to retrain your team. You'd lose access to all the optimized libraries. It's not worth it. So even if AMD makes a chip that's technically better, which they've tried to do, developers stick with NVIDIA because the switching costs are too high. Third, and this is more subtle, Huang was willing to cannibalize his own business. When NVIDIA started selling GPUs for data centers, some people at the company worried it would hurt the gaming business. What if data center demand drives up prices and gamers can't afford cards anymore? What if they alienate their core customer base? Huang didn't care. He saw a bigger opportunity and went after it aggressively. And yeah, there have been times when GPU prices spiked and gamers complained, but Huang was willing to accept that short-term pain for long-term growth in a much bigger market. Fourth, Huang made strategic acquisitions and partnerships at exactly the right moments. In 2020, NVIDIA tried to buy ARM, the chip design company, for $40 billion. The deal eventually fell through because of regulatory issues, but the attempt shows how Huang thinks. He's always looking for ways to expand NVIDIA's platform and increase their control over the ecosystem. They've also made smaller acquisitions of AI software companies, networking companies, anything that strengthens their position in the data center market. And fifth, Huang has been incredibly transparent about the risks and opportunities. If you read NVIDIA's shareholder letters, if you listen to their earnings calls, Huang doesn't sugarcoat things. He talks openly about competition, about technological challenges, about market risks. But he also paints a clear vision of where the industry is going and how NVIDIA is positioning itself to win. And that transparency builds trust with investors, even during periods when the stock price is volatile. Now, let me connect this to some broader patterns because this isn't just the NVIDIA story. This is a pattern you see in every company that makes a successful long-term bet on new technology. Think about Amazon and AWS. Bezos started building Amazon Web Services in the early 2000s, and for years it didn't make sense to Wall Street. Why is an online bookstore building data center infrastructure? Why are they investing billions in a business that has nothing to do with retail? But Bezos could see that cloud computing was going to be huge, and by the time every company needed cloud infrastructure, Amazon had a massive head start. Now AWS generates more profit than the entire retail business. Or think about Netflix and streaming. Hastings started investing in streaming technology in the mid-2000s when the DVD business was still growing and profitable. The board questioned it. Investors didn't understand it, but Hastings could see that physical media was dying and streaming was the future. And by the time every media company tried to launch a streaming service, Netflix had 100 million subscribers and a decade of experience in content algorithms and streaming infrastructure. Or think about Apple and the iPhone. Jobs started working on the iPhone in the early 2000s when the iPod was printing money, and there was no obvious reason to risk that business by entering the phone market. But Jobs could see that phones were going to become computing devices, and if Apple didn't build one, someone else would, and it would kill the iPod anyway. So he bet big on the iPhone, even though it cannibalized the iPod, and it became the most successful product in history. The pattern is the same every time. You identify a technology or market trend before it's obvious to everyone else. You invest heavily even when the short-term financials don't justify it. You endure criticism from investors and analysts and board members. You build an ecosystem, not just a product. And then when the market finally arrives, you have an insurmountable lead. But here's the hard part. For every NVIDIA, for every Amazon, there are 100 companies that made big bets on new technology and failed. The difference between success and failure often comes down to two things: timing and execution. Timing means you're early enough to build a lead, but not so early that the market never materializes. NVIDIA started investing in CUDA in 2006. If they'd started in 1996, before the internet, before machine learning was even a concept, the technology would have died before it found a market. If they'd started in 2016 after deep learning was already mainstream, they would have been too late. 2006 was the perfect time. Early enough to build a platform, late enough that the market was only a few years away. Execution means you actually build something that works and that people want to use. NVIDIA could have built a GPU computing platform that was too hard to use or too expensive or too limited in capabilities. But they didn't. They invested in making CUDA genuinely useful. They listened to developers and researchers and built the tools they needed. They kept iterating and improving, and that execution is what turned the bet into a success. Now let me talk about what this means for NVIDIA going forward, because the story isn't over. In fact, you could argue the most critical phase is happening right now. The challenge NVIDIA faces is that every major tech company is now trying to reduce their dependence on NVIDIA. Google is building its own AI chips called TPUs. Amazon has its own chips called Trainium and Inferentia. Microsoft is working with AMD and also developing custom silicon. Meta is building custom chips. Even Tesla is designing its own AI processors. All of these companies have spent billions of dollars buying NVIDIA GPUs, and now they're trying to design their own hardware so they don't have to keep paying NVIDIA's premium prices. This is a massive threat to NVIDIA's business model. If the hyperscalers, the Googles and Amazons and Microsofts of the world, successfully transition to custom chips for a significant portion of their AI workloads, NVIDIA's data center revenue could plateau or even decline. But here's the thing, and this is where Huang's long-term thinking comes in again. NVIDIA isn't sitting still. They're not just selling GPUs anymore. They're building a full-stack AI platform. They've got chips, yes, but they also have software, networking, entire systems. They acquired Mellanox, a networking company, for $7 billion to strengthen their data center capabilities. They're building supercomputers specifically designed for AI training. They're creating tools for AI inference, which is the process of actually using trained models to make predictions. They're moving up the stack, trying to provide more value so customers can't easily replace them. And Huang has been very explicit about this strategy. In recent earnings calls, he's talked about how NVIDIA is becoming a platform company, not just a chip company. They want to be the infrastructure layer for all of AI, the same way Microsoft became the infrastructure layer for PCs with Windows, or how AWS became the infrastructure layer for cloud computing. Will it work? Honestly, I don't know. The competition is fierce. The hyperscalers have unlimited resources, but if anyone can navigate this transition, it's probably Huang. He's already done it once, turning NVIDIA from a gaming company into an AI company. Now he has to do it again, evolving from a hardware company into a platform company. One thing I find fascinating about Huang's leadership style is how consistent it's been over 30 years. He still does the same things now that he did when the company almost went bankrupt in the 90s. He's obsessively focused on the technology. He talks to engineers constantly. He makes big bets on long-term trends even when the short-term financials are uncertain. He's willing to take risks that would terrify most public company CEOs. There's this famous story about Huang. And I've seen this mentioned in multiple articles and interviews where he wears a leather jacket to work almost every day. It's become his signature look. And apparently someone asked him once why he always wears the same thing, and he said something like, "It's one less decision I have to make. I can focus on the important things." Now, I don't know if that quote is exact, but the sentiment is very Huang. He's ruthlessly focused on what matters and eliminates everything else. Another thing people mention about him is his communication style. He's known for sending short, direct emails to employees at all levels of the company. If he sees a problem, he doesn't go through layers of management. He just emails the person working on it directly and asks what's going on. This keeps him connected to the actual work being done and prevents the kind of bureaucratic insulation that kills most large companies. And he's famous for his storytelling ability. If you watch NVIDIA's keynote presentations, especially the ones Huang gives at their GPU technology conference, he doesn't just announce products. He tells a story about where the industry is going, about what problems need to be solved, about how NVIDIA's technology fits into the bigger picture. And this storytelling ability is crucial for a CEO who's asking investors and employees to believe in a vision that won't pay off for years. You have to make people see the future before it's obvious. Now let's talk about some of the criticisms of NVIDIA and Huang, because no company is perfect and it's important to look at the full picture. One criticism is that NVIDIA has engaged in some anti-competitive behavior to maintain its dominance. There have been accusations over the years that they make it difficult for their chips to work with competitors' software, or that they give preferential pricing to customers who exclusively use NVIDIA products. Now, I haven't seen any definitive proof of illegal behavior, and NVIDIA denies these accusations, but it's something that comes up regularly in discussions about the company. Another criticism is about supply chain and manufacturing. NVIDIA doesn't actually manufacture its own chips. They design them, but the manufacturing is done by TSMC in Taiwan. This creates a dependency that could be risky geographically and politically. If something happens to TSMC, if there's a conflict in Taiwan or a natural disaster or manufacturing problems, NVIDIA's entire business could be disrupted. Now, NVIDIA is aware of this and has been working to diversify their manufacturing, but it's still a significant vulnerability. There's also been criticism about the environmental impact of AI computing. Training large AI models requires enormous amounts of electricity. Data centers full of NVIDIA GPUs consume massive amounts of power and generate huge amounts of heat. As AI scales up, the environmental footprint is becoming a real concern. NVIDIA has been investing in more energy-efficient chip designs, but it's an ongoing challenge. And then there's the question of whether NVIDIA's valuation is sustainable. At $3 trillion, the market is pricing in continued exponential growth in AI. If that growth slows down, if AI adoption plateaus, if competition from custom chips erodes NVIDIA's market share, the stock could drop significantly. Some analysts think NVIDIA is overvalued. Others think it's just getting started. Time will tell. But putting aside the criticisms and the uncertainties, what I find most interesting about the NVIDIA story is what it teaches us about making long-term bets in business. The conventional wisdom in business is to focus on your core competency, to double down on what's working, to manage your resources efficiently. And those are all reasonable principles, but they can also trap you. If NVIDIA had just focused on gaming GPUs, if they'd managed their resources efficiently and killed CUDA when it wasn't profitable, they would have missed the biggest opportunity in their history. They might still be a successful gaming company, but they wouldn't be worth $3 trillion. The companies that create the most value are the ones that make asymmetric bets. They invest in opportunities where the downside is limited, but the upside is enormous. For NVIDIA, the downside of CUDA was maybe a few $100 million over several years. That's real money, but it wasn't going to bankrupt the company. The upside was becoming the infrastructure layer for the entire AI industry. That's a $1 trillion opportunity. But most companies don't make these bets because they're terrified of the downside. They're worried about short-term earnings. They're worried about what analysts will say. They're worried about looking stupid if the bet doesn't pay off, so they play it safe. They optimize the current business, and then when the market shifts, they're left behind. Huang was willing to look stupid for 10 years while CUDA lost money. He was willing to endure criticism from the board and investors. He was willing to take the short-term hit to his earnings in exchange for the long-term upside, and that's what separates the great CEOs from the merely good ones. Another lesson from the NVIDIA story is about the power of ecosystems. NVIDIA didn't just build a better chip. They built a platform. They created tools and libraries and training programs. They built a community of developers who learned CUDA and built applications on top of it. And once that ecosystem existed, it became self-reinforcing. The more developers use CUDA, the more valuable NVIDIA's platform became. The more valuable the platform became, the more developers used it. This is the same flywheel effect you see in other successful platforms. iOS has millions of apps because Apple built a developer ecosystem. AWS has millions of customers because Amazon built tools and services that make it easy to build on their cloud. Windows dominated PCs for decades because Microsoft built an ecosystem of software and hardware partners. The hard part about building an ecosystem is that it requires sustained investment before you see returns. You have to give away tools for free, you have to educate developers, you have to subsidize early adoption. But if you do it successfully, you create a competitive advantage that's incredibly hard to replicate. Now let me talk about where I think this goes from here, and I want to be clear, this is speculation on my part. I don't have insider information. I'm just connecting the dots based on publicly available information and patterns I've seen in other industries. I think NVIDIA's biggest challenge over the next 5 years is going to be diversification. Right now, a huge portion of their revenue comes from a small number of very large customers. The hyperscalers, Google, Amazon, Microsoft, Meta, these companies probably account for more than half of NVIDIA's data center revenue. That's a risky position to be in. If those customers successfully transition to custom chips, NVIDIA's growth story falls apart. So Huang needs to expand into other markets, and you're already seeing this. NVIDIA is pushing hard into automotive, building chips and software for autonomous vehicles. They're investing in robotics, creating platforms for AI-powered robots in manufacturing and logistics. They're expanding in healthcare, using AI for drug discovery and medical imaging. They're even getting into the metaverse and digital twins, building tools for creating virtual worlds and simulations. The bet is that AI won't just be for training language models and image recognition. It'll be for everything. Every industry will be transformed by AI, and every industry will need NVIDIA's technology. If that happens, if NVIDIA can become the infrastructure layer not just for tech companies, but for automotive, healthcare, manufacturing, logistics, retail, finance, then the $3 trillion valuation might actually be justified. But it's a big if. These industries move slower than tech. They have different requirements. They're more risk-averse. NVIDIA will have to adapt their technology and their sales strategy to succeed in these markets. And they'll face competition from companies that already have relationships and expertise in those industries. Another big question is about the future of AI itself. Right now, we're in the middle of a massive AI boom. Every company is investing in AI. Every startup is building AI products. Venture capitalists are throwing money at anything with AI in the pitch deck. But will this last, or are we in a bubble that's going to burst? I genuinely don't know. On one hand, AI seems like a genuinely transformative technology. The capabilities of large language models, of computer vision, of reinforcement learning, they're impressive and they're enabling applications that weren't possible before. On the other hand, the level of investment and hype feels unsustainable. At some point, companies are going to start asking for return on investment. They're going to want to see actual business value from their AI initiatives, not just demos and prototypes. If the AI boom continues, NVIDIA is positioned perfectly to benefit. If it slows down or if we hit an AI winter like we did in the 80s and 90s, NVIDIA's stock price could get crushed. But even in that scenario, I think they'd survive. They still have the gaming business. They still have professional visualization. They still have automotive. They're diversified enough now that an AI slowdown wouldn't kill the company, even if it would hurt the stock price. One more thing I want to talk about is Huang's succession planning or lack thereof. He's 61 years old. He's been CEO for 31 years, and as far as I know, there's no clear succession plan. NVIDIA's entire strategy, their entire culture, it's built around Huang's vision and leadership. What happens when he retires or steps down? This is a risk that investors should be thinking about. Apple struggled after Jobs died. Microsoft struggled after Gates stepped down. Strong founder-led companies often have a hard time transitioning to new leadership. And NVIDIA is even more dependent on Huang than those companies were on their founders because Huang is still actively running the company day to day. Now, maybe Huang will stay CEO for another 10 or 20 years. He seems healthy and engaged. But at some point, there will be a transition. And how NVIDIA handles that transition will be critical to the company's long-term success. Alright, so let me pull this all together and talk about what we can learn from Jensen Huang and NVIDIA's story. First, the power of long-term thinking. Huang invested in CUDA for 10 years before it became profitable. Most CEOs wouldn't have the patience or the courage to do that, but that long-term investment created a competitive advantage that's now worth hundreds of billions of dollars. Second, the importance of building ecosystems, not just products. NVIDIA didn't just make better chips. They created a platform with software, tools, and a community of developers, and that ecosystem became a moat that competitors can't easily cross. Third, the willingness to make big asymmetric bets. CUDA was a relatively small investment that had the potential for enormous upside. That's the kind of bet that creates outlier returns. Fourth, the ability to adapt and survive through multiple near-death experiences. NVIDIA almost went bankrupt in the 90s. They struggled through the financial crisis, but they kept adapting, kept iterating, and eventually found their path to success. Fifth, the combination of technical expertise and business acumen. Huang understands the technology deeply. He can talk to engineers about chip design, but he also understands markets, strategy, and how to build a business. That combination is rare and valuable. And sixth, the importance of timing. NVIDIA's bet on CUDA worked because they were early enough to build a lead, but not so early that the market never materialized. Timing is partly luck, but it's also about paying attention to trends and being willing to act before it's obvious. Now, is NVIDIA's success replicable? Can other companies follow the same playbook? I think the principles are replicable, but the execution is incredibly hard. It requires a CEO with Huang's technical knowledge, strategic vision, and willingness to endure years of criticism while investing in unproven technology. That's a rare combination. But if you're building a company, if you're making strategic decisions, I think there's a lot to learn from how Huang approached this. Don't just optimize for short-term profits. Think about where the market is going in 5 or 10 years. Make investments in technology and capabilities that will pay off in the future, even if they don't make sense on a quarterly earnings call. Build ecosystems and platforms, not just products, and be willing to make big bets on asymmetric opportunities. One last thought on this, and then I'll wrap up. I think the NVIDIA story is also a reminder of how much individual leadership matters. There are a lot of smart people in Silicon Valley. There are a lot of companies with good technology, but there's only one NVIDIA. And the reason NVIDIA succeeded where others didn't comes down to Jensen Huang's decisions, his vision, his persistence, his willingness to zig when everyone else was zagging. That's not to say he did it alone. He had great co-founders, he had talented engineers, he had supportive investors at critical moments. But the key strategic decisions, the decision to invest in CUDA, the decision to keep funding it when it wasn't profitable, the decision to build an ecosystem instead of just selling chips, those were Huang's calls, and they made all the difference. So that's the story. That's how NVIDIA went from 6 months away from bankruptcy to $3 trillion. That's how Jensen Huang turned a failed graphics card company into the infrastructure layer for the AI revolution. It took 30 years, multiple near-death experiences, a decade-long bet that lost money every quarter, and a willingness to endure criticism while building toward a vision nobody else could see. Now look, I'm sure I got some details wrong here. I'm piecing this together from public sources, interviews, shareholder letters, articles. I wasn't in those board meetings. I don't know exactly what Huang was thinking during the dark days of 2008, but the core story is solid, the pattern is clear, and the lessons are valuable for anyone trying to build something that lasts. Alright, so that's the deep dive on Jensen Huang and NVIDIA's transformation from a gaming chip company to the $3 trillion backbone of the AI revolution. That's how a CEO who was willing to invest in unprofitable technology for a decade, who endured constant criticism from investors and board members, who made a bet that seemed insane at the time, ended up building one of the most valuable companies on Earth. The decision to keep funding CUDA when every rational person said to shut it down. That's the difference between being a good company and being a great one. If this kind of research and storytelling is valuable to you, if you want to understand how these companies were actually built, not the sanitized PR version, but the real messy, complicated version with all the near-death experiences and controversial decisions, hit that subscribe button. I release new episodes every single day, breaking down the strategies, the bets, the moments that turned ambitious ideas into billion-dollar empires. I'm Alex Morgan. Thanks for listening to Behind the Billion.